see my screen. Chapter 3 kind of brings it all together in that sort of like this. Right now, journal entries and the financial statements probably seem like two completely different things. One is like telling you how much money you made and what you have in the bank and all that kind of stuff. And the other one is writing down the transactions. And they seem completely different, but they actually are related. It's sort of like this. We start out with journal entries, which we've done, chapter 2. And all the way down at the bottom here, number 4, these are the financial statements. And as you're probably catching on at this point, there are 2 steps in the middle here that we're going to go over today. And those 2 steps are, let's go a different, make them blue. General ledger and hey, be blue.
Just a quick question. The emailed handout says chapter 4. Is that okay? Is that intended to be chapter 3?
That is a very good catch. That's me being stupid. No, chapter 3 is actually a harder chapter. That's why we're going to do it after we do chapter 4. And actually, we're going to learn some stuff in chapter 4 that help us in chapter 3. But yes, it is chapter 4. I apologize. So,
no biggie.
Yeah, we have these 2 things that are going to connect the journal entries to the financial statements. So that's what we're going to talk about. And this whole kind of thing is called the accounting cycle. Oops. So this kind of accounting cycle is we make the journal entries like we did in chapter 2. We enter them into this general ledger and the trial balance, and from that we make the financial statements, and that kind of ends up the entire cycle. So the journal entries kind of start everything. Now you might be wondering why we did financial statements first. It's kind of good to see where you're heading. You know, if we did the journal entries first, which by the way I think is the kind of way they usually show it, but it's nice to know what the goal is. So financial statements are really kind of the goal. This is what you want. This gives managers information they need, you know, bankers, financial people, managers in the company, all that kind of stuff. They'll all look at these financial statements. So that's kind of the goal, is to get these people information that they need. And, you know, this other stuff is kind of how we get there. Okay. So, without further ado, let me see here. Okay, so if you look at the handout, the chapter 4 handout, now, thankfully, all the journal entries are already made. So we're going to use these journal entries. These are made and assume they're correct and all that kind of stuff. So these are the journal entries, and we're going to end up doing what they call putting them into these other accounts, these other statements here. So the general ledger, and if you look down here, the trial balance, which we'll get to obviously, and then we'll make the financial.
What number handout is this?
This is chapter 4 handout 1.
All right.
You know what? I just realized I don't have that in Blackboard.
You gonna post it in the class handouts or somewhere else?
Yeah, that's what I'm gonna do right now. It's in your email.
Oh, no.
One second here. Oops. Okay. So anyway, this is the chapter 4 handout. And again, all the journal entries are already made, so that's a good thing. But what we're going to do is kind of figure out how to use these other things that we have here: general ledger and balance, trial balance. Here's the problem with journal entries, which I think we talked about before. It's very hard to look at this and know, say, how much cash you have. You know, if this is a journal, these are journal entries. We know what the transactions were. We can figure out what these transactions are from, you know, looking at this. But it's very difficult to, you know, for instance, we know that we bought supplies with cash. However, we really don't know how much cash we have just by looking at these. I mean, you know, there's some cash here, there's some cash here, some cash here, some cash here. Point being is you don't know how much cash you have by looking at this thing. So what we have to do is kind of group all the cash parts together. You know, as we go on the list here, we're going to group all the cash parts together, all the common stock parts together, all the revenue parts together. We're going to get all these accounts that we have. We're going to group those, you know, put those into a single account so that we know how much, you know, we need to know how much cash we have. We need to know that the balances for each of these accounts. So that's what we're going to do with the general ledger. Now, in the email I sent out, let's save that. I have one here that has just the journal entries in it. You could also just copy the same. You could also just pull up a second version of it if you want. And I think I'm probably going to try to put these on the same screen from at least for to show what we're doing here. You don't have to do the second one. I'm getting rid of this guy. I know it's going to be a okay. One moment here. Okay, so here are going to be the I have the journal entries up here. And then down here, I'm going to go to the general ledger. This may not work out so well. We'll see how this works. Yeah, I'll just keep maximizing and minimizing this, I guess. Okay. So this first one we're going to do. So we have cash. And common stock. So what we're going to do is, this is called posting. So on the debit side, we're going to come down here and you'll notice this cash account that there is a left and a right. And this left is going to be the debit. So whichever is on the left-hand side. So we're going to put 24,000 in here. Oops, I'm in the wrong one. Okay. And then we also had common stock. And I'll make this bigger in a second so we can kind of see it. So this is that first journal entry posted. Wait, that's small. Okay, so 24,000. Okay, so you see the cash account up here has 24,000, and then down here, the common stock also has 24,000. So we just took that first journal entry and we posted it. What they call posting. It's a new term. If you've never heard of it, you shouldn't have heard of it. It's the first time you're hearing it. First time hearing it. So we just took that first journal entry and we put it into the two accounts. And we're gonna do the same thing for the second one. So let's pull that up. Okay, the second one, let's make this, I'll make that green for now. So we have cash, 7,200, and revenue, 7,200. Okay, so cash is a debit for 7,200, and okay. So this will be 7,200. And the revenue will be 7,200.
What's on the right side and what's on the left side?
The right side are the debits, just like in the journal entry. So this will be the debits. So the left side will be debits. I say press. I mean, again, debit and credit really don't mean anything to us other than left and right. So whatever in the left column, the debit column, will be on the left down here. Whatever in the right column will be in the right column. You know,
Okay.
yeah. The reason I don't have those labeled in here is just to save space, because this is already kind of cumbersome. All right. So that's kind of what we do for all of these. So we're just going to keep going down the list here. So let's see, unearned revenue and cash. And again, these just assume the journal entries are correct. See better. Okay, so cash is 360. Cash is 360. Under revenue is 360. This is one of those things that'd be much easier to do in a classroom, you know, because you'd have both of mine, you know, sitting on your desk at the same time. By the way, if anyone has any ideas on how to do this better, I'm open to it. It's hard to go between two documents. Okay, so, well, you know what? There's actually, let me see. This might make it too small though. Can you guys see that, or is that just like a postage stamp?
I can see it.
Yeah, this is fine.
Oh, okay. Well, let's do it this way. Okay, that'll make it easier. All right. So let's see. I'm going to do this. So I'm just going to go ahead. Okay, so we have that. We have that. Keep my color coordinating up to date here. Okay, and then we'll start over with, yellow. Okay, so utilities expense and accounts payable. Okay, so utility expense, debits. Again, they're always debits, remember? So 576. Oh, by the way, I realized earlier, and I just posted it. Someone actually emailed me about it. Who emailed me about it? Someone emailed me about it. Was it Sean? Emailed me about it. The chapter 2 exam thing is now posted, so you can get rid of this. you can actually see it. That it's there. Oops. Maybe I can make these bigger. That's not gonna work. Okay. All right, so utilities expense. 576. Accounts payable 576. So anyway, this is called posting. You're simply taking it, put it in the wrong spot. Sorry about that. You're simply taking them and putting them over into these general ledgers. And just to give you kind of a heads up, at the end, we're going to know how much cash we have because we're going to have all of our cash transactions will be here. And we will be able to figure out how much cash we have and all the rest of these accounts. You know, we'll be able to figure out how much we have. Okay. Equipment. 28,800. Cash. 7,200. I just realized that that's an unhappy coincidence that those are two 7,200s. Those are not related. And accounts payable 21,600. So you kind of see this transaction. Here's what they did. They bought coming for 28,800. It looks like they made a down payment of 7,200, and the rest of it's on account. Kind of like a loan. So I paid cash 7,200, and the rest of it's on borrowed. Okay, accounts payable. I don't think I should hear that. That is an embarrassing little dog. 13 pounds of bad ideas. That's what that little dog is. Okay, so we have our cash of 8,640. So that's cash going down, and they're paying off accounts payable 8,640. Oops. Hey, quite honestly, for doing that, you really don't have to know the account. You know, it really is just, you know, take whatever is left, put in the left-hand column, whatever's on the right-hand side, put in the right-hand column, and that's it. Depreciation expense we haven't had yet, but we can make the journal entry for it, or the post it into the general ledger. This is that things don't last forever. For instance, this equipment isn't going to last forever. It wears out, gets old, you can't use it anymore. So we depreciate it. We say, okay, we're going to take a little bit off it every year, and that'll be the what they call depreciation expense. Accumulated depreciation. We're going to talk about this in a little bit. This is a new, not only is it a new account, it's a new type of account, which we'll talk about. all we're doing is taking these over here. Supplies is 2160. 60. Supplies expense. $15. Oh, I want to say something about this one. $1,512. Okay, this, and this is I'm gonna zoom in on this one for a second.
Wait, how come the other supply?
I think the question you just had is what I'm going to talk about. Yeah, and you're right. You'll notice something about these two accounts. Let's do that. When we first buy the stuff, when you first buy the supplies, it's an asset. Right? I mean, truthfully, when you buy supplies, if you buy 2,160 of supplies, you're no better or worse off than you were before. And in this case, we got a liability, I think, with it. Did we buy this on accounts payable or something? Oh, did I put the second half into that one? Oh, no, we paid cash for it. Okay, so we paid out cash for $2,160. We got supplies $2,160. We're no better, worse off. Now, these, supplies expense, this is as we use the supplies. Let me write it differently. So 1,512 of them, of the supplies we used up. So we're going to take it out of our supplies. We no longer have these, and we're going to expense them. Now, it's an expense. Now, cash hasn't actually left the place, but the supplies have, whatever the supplies were, envelopes, postage, or whatever it is, that has left the place. So, it's not necessarily cash going out. The cash already went out up here, but it's as you use those up. And this, by the way, this is what Chapter 3 is about. Now, honestly, we could do this. We could post them here without knowing that. But that's kind of the background behind this, is that as we use up these supplies, it comes in as an asset once we use them up. And what we're going to find out then is, well, how much supplies we have left. And we'll do that in a minute or two here. Let's see here. Okay. Wage expense. So wage expense was 1,440. And cash, 1,440. I'm gonna get rid of that just because it's messing up my stuff here. Okay, so Insurance expense. $8,640. What did it say? 864, I'm sorry. Cash and revenue. So apparently we did some work and paid us cash for it. Cash 2880.
So we see a leader like, oh yeah, this motherfucker leader. This motherfucker up here. And then you hooping.
Hey, boy, watch your mouth.
Let's see. All right, yellow. Prepaid rent. Cash. So this is when we pay rent ahead of time, usually for more than one period. Earned revenue and revenue. I'm going to talk about this one too. This is a little bit interesting. Unearned revenue, 144. And revenue. Okay,
Professor,
yeah,
sorry, not to stop you, but I believe that your 864 should go under insurance. Not,
you are
meant to
absolutely
spend.
right. And by all means, stop me from doing stupid things. Yes, I apologize. Yeah.
No biggie.
Uh,
You know how on mine, every time I've just been copying and pasting each one and then entering it in the
Yeah.
column it belongs, but it keeps adding these crazy spaces and now my whole thing is jumbled.
Yeah, it did
But-
that to me too.
Well, if you can make heads or tails out of it, that's you can just turn it the way it is. It doesn't have to be.
Okay, for sure.
Yeah. I do wish there was a better way to to show this. This is one of those things that, like I say, is really easy in the classroom and really hard to do when you're not, doing it this way. But I just want to show you something really quick here, and this is, this unearned revenue is a liability. Oops. So it's a liability. Someone gave us money and we didn't do anything, so we owe them. Well, here, this is what we do, and we'll get more into this in chapter 3. But this is when we've earned it. So we say, okay, well, we owe them $360 worth of whatever service. We did 144 of it, so we're going to take it out of this liability. We don't owe them that anymore, and we're going to put it right into revenue. So now it is earned revenue. We've earned 144 of it. We still have some left to earn, but that's kind of what's going on with that one. Oops. Okay, and the last one, And this one is rent expense and prepaid rent. Okay, so rent, prepaid rent is going down 432. Rent expense is going up, expenses will also go up. And so this is, so prepaid rent is an asset. But as we use up that prepaid rent, we expense it. Yeah, so this is so I don't know how many months this is. Was that 4 months maybe? I don't know. What is 4? Yeah, okay, so this looks like about 4 months worth, I guess, of rent. We paid ahead of time. So we use up 1 month worth. So we say, okay, we're gonna expense that 1 month worth, and whatever's left over, we still have sitting in that account. Again, this is some stuff you see in chapter 3. We really don't have to know that right now, just to get these balances, but it's kind of a heads up. Okay, so here's what we're going to do. Oops. Better way to do that, but what it is. Okay, oh, there we go. So what we're gonna do is we're gonna add up both sides. So we're gonna add up both the left-hand side, which is the debit side, and the right-hand side, which is the credit side. We're gonna add those up. And at the end, we're gonna say the biggest side always wins. In other words, if we have more debits, the ending balance will be a debit. If it's a credit, it'll be a credit. And we'll see how we go through it. But the whole point of these are to get down to one number. You know, there's only one number. How much cash do you have? And so that's kind of what we're gonna do here. Okay, so we're gonna add up this side. My doggy camera didn't get turned on. Wait, that little dog you heard, it looks just like this. It's a little nutty dog. Okay, so I'm just gonna add up the one side there. 40. And you may want to check my numbers. I need to make sure I'm not doing something stupid. Okay, well, first of all, is that what you guys got? Vote for those two?
Yes.
All right. So what we're gonna do is we're gonna subtract them. Now notice that the debit side here is the biggest, so it's gonna win. So we're gonna subtract them. We want to get to one number. And so that's minus 344. $12,408. Okay, so this. I don't know. Oh, I know. Almost heard of it. Ah. Okay. So this is how much cash we have. Now notice, from all this stuff, while these recorded the transactions, these, you couldn't tell how much cash you have. So now we know how much cash we have. Now some of these, for instance, the equipment, oops, we don't really have to add that one on you. It's getting there, it's getting closer. How about if I do this? Oh, you gotta be kidding me. Oh, there we go. Oh, no, we don't. Okay. So some of these are just gonna be, singles. Coming over here, we're gonna add these up. $10,244. Okay, so 22,176 minus 8640. 13,536. So you'll notice all these are just getting down to one number for each of them. Some already are one number. Okay, supplies. So we bought 2160, we used 1,512, so what's ever left over there? 648. So this is how much in supplies we have left. Come on, you. There we go. Okay, don't touch it. All right. Let's see. Unearned revenue. Now we've earned some of that. So how much do we still have left to earn? We still have 360 in the account. We've earned 144 of it. 216. There we go. This one, we have some ciphering to do. That was 296. Hey, look at that one. Okay. So, and we don't have anything for retained earnings, and that's probably because it looks like they just started this place out. So if this is the first year, you wouldn't have any retained earnings yet. You know, if retained earnings are the same thing as income. So if this is your first year of operations, you don't have any income from last year. Place didn't exist then. So if this is your first year, you won't have any retained earnings. So retained earnings will start out as 0. As time goes on, it'll something. As time goes on, it'll change. But at least initially, retained earnings will be 0. Okay. Okay, so what we're going to do now, at this point, as you guys know from watching me, you could make a mistake here in posting these. Right? You could make a mistake in posting these. At least I could. So what we're going to do is we're going to take each of these accounts and we're going to plug it into what we call a trial balance. And the trial balance just says, okay, we know that debits have to equal credits. So that's what we're going to check right now to see if the debits equal credits. So let me see if I can. Okay. Oops. Hey. Okay, I'm going to have to do something. I know. I'm trying to get this on to, oh no. Oh, okay, there it goes. I lost my circles. Okay. Oh, that's not so bad. So what we're gonna do is for each one of these, you see these accounts, so cash, if it's on the left-hand side, it's a debit, so this would be 1,200, 12,408. Right, so this is just from the cash account. Supplies. Take that asset out there. It is an asset. I'm gonna take it out of the account. Look for supplies. So supplies are 648. Prepaid rent is 1,296. Equipment is 28,800. Okay, now here's the confusing one. And this is a brand new type of account and we'll talk about. Accumulated depreciation. It goes with the assets. Put it in. You'll notice something strange about it. What's strange about this accumulated depreciation account?
Is that credit?
Yep. Yeah, assets. They're debits usually. I mean, that's just the way, you can, for instance, you can have zero cash, but you can't have negative cash, right? So this is a negative. And what it is that these two accounts go together. So this equipment really isn't worth 28,800. We're saying, okay, we used, it's probably what, 10 years. I think if you divide by 10, it'll probably come up to that. We're saying, okay, every year we're going to take off a little bit off of this equipment account. And so when we do the financial statements, we're going to subtract this out, the accumulated depreciation. This is what's called a contra account. New term. And what do you make it even more specific? This would be a contra account, a contra asset. Let me clean this up a little bit. So a contra account just means it goes against another account. So in this case, it goes against the equipment. It says, look, this equipment really isn't worth 28,800. It's 28,800 minus this. So this is called a contra account. Specifically, it's a contra asset account, which I don't know if that matters too much, but it goes against another account. So a contra account means it has to be paired up with another account, and generally it goes against it. So equipment is accumulated depreciation, and we'll figure out why we use this account in chapter 3. But yeah, so these two go together. So when we do the financial statement, we do the balance sheet, equipment really isn't worth 28,800. It's worth 28,800 minus this. Oops, too much. Okay. Accounts payable. Wrong. I'll show you how you find that error in a little bit here. Okay, revenue is 1,244. 10,244. unearned revenue, 216. I have this thing. Okay, common stock, 24,000. Retained earnings, 0. It's our first year. Revenue, 10,244. And view the expenses. We have expense is 576. Depreciation expense is 2. Okay, so I think that's all of them. Okay, so what we're gonna do is get the totals for each of these. So we're gonna add up all the debits and all the credits. Now, we know that these two should equal. So this is what we're kind of checking on here. $50,856, is that what you guys got?
I got 47,976 because I subtracted the 2880.
Oh, okay, now we're just gonna have these columns. The 2880 will be in the credit column.
Oh, okay.
But if you did take that out, yeah, I mean, I can see how that would be. But yeah, so
Yeah, so I added it. It's 50,856.
okay, good. All right, so let's see, I gotta do the other side. So 2880. 13. $50,000. I'm off.
I think unearned revenue is 260. Maybe, or no, I don't know. Is it?
I can add up again. I may have entered them wrong. Let me try this again. Um,
I do have that same number.
But these don't equal. So which is my debit side the one that's off?
Oh, the 56.
Yeah, there's something wrong here. Well, let me take a look at it. $20 is an unusual amount to be out by. Did you get the same thing, or did you guys get something different?
Yeah,
it's
I'm up
okay.
by
You have-
$20.
You have 10,244 and it's 10,224.
Oh, good
Before.
catch, good catch. So my math is wrong up here.
Oh, wait.
No, I think you're right. I think my math is wrong up there. Let me try that again. That's a tough one to catch. You are absolutely right. Excellent. That is a tough one to catch. I'll tell you why in a second here. So 10,220. So that would be this. Now we drop it down by $20. So this would be, yeah, so that's it. Okay, yeah, that's a tough one to catch, and a good eyes catching. And I'll tell you why. A lot of times, there's two types of transactions. A lot of times you'll catch with a trial balance. And first of all, if the trial balance doesn't balance, your financial statements won't balance. So someone say, man, my balance sheet doesn't balance. And you look at the trial balance. If that doesn't balance, the financial statements aren't going to balance. The balance sheet won't balance. So the debits have to equal the credits. We're not doing that just for fun. It's because if they don't balance, then the financial statements aren't going to work out either. So you come down here now. Let me tell you a few of the errors that are more common that you catch. First of all, the one that I made is usually not the one that it's not easy to catch. If you put a debit in a credit, it'll be, the numbers at the bottom will be off by twice as much. So for instance, notice what would happen. Let's say I made an error and I put this 24,000, I put it as a debit, right? Notice that the debit side would be 24,000 too high, and the credit side would be 24,000 too low. So whatever the difference is, so if it's a debit credit problem, oops. It'll be off by 2. So you take the difference and divide by 2. So the difference between here would be 48,000. So if you take the difference, you go, oh, okay, it's this one. Yeah, that's probably the one it is. If it's a transposition error, oops, what that is. for example, $560 recorded as and this is somewhat common. If you take the difference, whichever way you want to do it, so 650 minus if you can divide by 9, and get a whole number, it's usually a transposition. So if it's off by 90, okay, divide by 9, it'll give a whole number 10. Then start looking for this. You want to, and it works for anything. I mean, it works for if you had I don't know, 280 recorded as 820. $820 minus 280 is what, 540?
540.
Yeah, divide by 9, you come out to whatever that is. 60. Yeah, so whatever. So transposition errors are somewhat common, and so if you're off by something that can be evenly divided by 9 and you come out with whole number, likely it's that transposition error. Okay. Finally, something we're familiar with. Financial statements, income. Okay, so we start out with a revenue, just like we did way back in chapter 1. $10,224. If you have 244, like I did, change that. The expenses, you can just copy these. You can also type them in if you want. I'm lazy. Okay, now you don't have to do this. I'm going to go ahead and put negatives in front of all these just because just to know that these are getting subtracted out. This is money leaving the place. Okay, so I gotta wait my cam, my calculator cam.
Can you quickly go back up to the trial balance for a moment to show the full chart? Okay, I figured out what I did wrong. Thanks.
Okay, I think it comes out to 2520. 2,520. Is that what you guys got?
Yes.
Yep.
Okay, retained earnings. Our beginning retained earnings was 0 because it was the first year. Moving to retain. Add in our net income. I don't think we had any dividends, did we? Nope, no dividends. If we had something, we would put it, oops, stop that. We put it in there, but we don't. So our ending retained earnings is just the 2,520. Yeah, so notice, I mean, we made this money, but we didn't pay anything out, and this is our first year. And probably didn't pay anything, the first year, a lot of times things are kind of tight, so you may want to be holding on to the cash. Okay, yeah. All right, balance sheet. Asset. Okay, and now let's accumulate depreciation. This is going to be negative. Oops. So this is where that negative amount is. So this equipment really isn't worth 28,800. It's worth 28,800 minus that, whatever that comes out to. You can get a total for that if you want, but net equipment, but so just leave it like this. Okay. Either way, it'll come out the same either way. So 12,000. $40,272. And again, you may want to check that to make sure that I'm not putting stupid things up.
I've got the same.
Same, okay. Liabilities. We have accounts payable and unearned revenue. So my ability to be those two together. Oh, wait. Keep forgetting about my calculator cam. 13,536. $13,752. Make those teal. Equity, we have common stock of what, 24,000, I think? Yep. Oh, I'm late. Sorry. I'll hurry up. 24,000, our ending retained earnings. Is not that. Hey, balances, all right. Okay, I'll go ahead and sign off. I'll leave this up for a little while, but nothing for next class. If you haven't turned in the chapter 2 stuff, I encourage you to do so. And the chapter 2 exam is, there is a place to submit it now. So you can put in there. Just so you know, your grade to date only has the chapter 1 stuff in it because the chapter 2 stuff isn't due yet.
So there's no class on Thursday?
No. There's class on Thursday. There's just no assignment due.
Oh, okay.
Yeah. Yeah. So we still have class. Just there won't be any new assignment. Just encourage you to get the chapter 2 stuff in into it. This is chapter 4, and chapter 4 is kind of like I don't know, like baking a cake. You just follow, put this here, put that there, and it's not nearly as difficult, I think, as chapter 2, where you have to really think about what actually happened to record it. It's more just a mechanical kind of thing of posting it over. As you saw me do 3 times today, it's not as easy as it looks sometimes. And if you make mistakes, that's just part of it, and trying to find them. Okay, so anyway, I know you guys have class coming up. So I'll talk to you guys on Thursday. Nothing due for this class. We will have class on Thursday, but nothing due. Okay.
Professor,
Yeah.
so, before I actually got disconnected when you were going through the trial balance, and I think that's why I was having a little bit of trouble, but I was wondering if you'd be willing to help me on something, because I'm still coming up wrong, but I have the same numbers. I think you were explaining the accumulated depreciation and how it correlates with as a contra account.
Yeah. Yeah, it goes against the equipment.
So what I would do is I would subtract it from the equipment and then add the side of debits and then add the side of credits that way.
No,
Because when I do the,
you'll just
okay,
do
so when-
it, only the debits and the credits together.
oh, so it is, okay. So for some reason, I thought that yours said 356 for some reason.
It may have at one point.
Okay, no, that's why I was like, I swear I'm adding it all up. Okay,
Yeah.
so 13,536 plus 216 plus 2,400 plus 10,224 equals, whoa, what did I just do? 28, so sorry, let me, really quick, I don't mean to take your time. I just,
It's fine.
wait, go back.
Okay.
All right. 13,536 plus 216 plus 2,400 or 24K plus 10,244 equals 50. Okay, how did I not get this before? Okay, that definitely helps. That's pretty much
Okay.
what I had here. I just was like, I don't understand how I'm not getting the 356 still. Okay, that
Yep.
was it. Thank you so much. Sorry about that.
Okay.
Okay, have a good one.
Well, you too.